Speaking of starting a presentation with a question, the most important question to ask here is why, right? Why? Why did Satoshi Nakamoto, whoever he, she, they are, create Bitcoin? I mean, presumably this took some thought, took some effort, took some time. Thought, effort, and time are money, the ultimate money, I would say. Why? Because they were trying to solve a problem. And a problem that I would argue is very practical, a very practical problem. What is the practical problem? Well, the practical problem for, I think, most people in this room is not difficult to identify. The practical problem is that what we currently overwhelmingly use as money, we believe is substandard, inadequate, lacking the four Aristotelian qualities that were just enumerated by Michael in the previous presentation. I couldn't get a signal down here. In any event, that's why Bitcoin exists. My presentation tonight, my comments, will begin with a little sort of discussion about that background, that why. And indeed, we'll talk about gold as the traditional alternative to an inadequate currency, that is, one that does not have those Aristotelian qualities. And yes, I've written a book about it. It's called The Golden Revolution. It was published by John Wiley & Sons in 2012. And basically the point of the book was to try and make the, well, let's face it, somewhat provocative case that the world, in fact, although most people don't recognize it, is moving back onto some form of remonetization of gold as actual money, if not in day-to-day transactions, then at least at a minimum to settle international balance of payments for those who follow that sort of thing. That is, for use as an international money, the way it was in fact used under the Bretton Woods system. And so, the question is why? Why Bitcoin? But I'm going to answer that question largely with reference to gold, as you will see, and as I hope I can manage with this device. Yes, so another question to begin my presentation specifically: why do fiat currencies, that is unbacked currencies, why do fiat currencies always fail? Well, here's a simple answer. And it's a rather elegant one because, in fact, it helps to answer other questions, but we're not going to deal with those tonight. Power tends to corrupt. Absolute power corrupts absolutely. This is a famous quote by Lord Acton, who was a somewhat cynical commentator on certain aspects of British imperialism, but I'm not going to go into that either, given where I am tonight. But now let's modify, by corollary, that quote. Monetary power tends to corrupt. Absolute monetary power corrupts absolutely. And what do I mean by this? What is absolute monetary power? It's when you have the power to control, to print, to create, to regulate, etc., the money of a country, or better yet, if you're the United States, the world. What do I mean by that? The US dollar is the overwhelmingly dominant global reserve currency. It is the de facto global monetary base. The euro area can print as many euros as they like, China can print as many yuan as they like, Japan can print as many yen as they like, but guess what? As they do so, they accumulate dollars as reserves. And reserve currency systems have existed as long as money itself has existed. Just ask the Greeks, the greatest coiners, as it were, of the ancient Mediterranean world. Their coinage was used by everybody, including the Romans, who only managed to replace Greek currency, or that is coinage, with their own many, many centuries after they had clearly displaced Greece as the dominant military, political, and economic power of the Mediterranean. So monetary power can live on for a long time, but as we see in this chart here, reserve currency status does not last forever. Absolutely not. And in more modern times, that is, we're talking sort of Renaissance and beyond here, and the age of imperialism, which of course allowed the European powers to accumulate far more gold than they previously could simply through trade. Portugal, Spain, the Netherlands, France, Britain, and the U.S. to this day, have all managed to supply the world with a reserve currency. That is the one that is effectively the currency that sits in the vault that backs whatever domestic currency issuance takes place. But now, let's just quickly stop on this chart here, and let's make a few observations, because although it appears there is just a steady progression of the same reserve currency status through time and through country of issuer in this chart, something else is going on. And it's important to observe that to understand the gold versus Bitcoin debate of today. Well, one thing should be obvious. Portugal and Spain were the original European issuers of reserve currency, that is non-Roman, post-Roman, reserve issuers of currencies, reserve currencies, for a reason. And the reason was they were the ones with the colonies, with the big gold and silver mines that created the supply for the coinage in the first place. Just like with Bitcoin, if you can't mine the stuff, how can you possibly introduce it into circulation? And if you can't introduce it into circulation, then there's only one other way to provide currency to the rest of the world, and that's by running a trade surplus. That is, you need to export more than you import. And by doing so, you accumulate other people's currencies, which then you can spend subsequently on whatever it is, goods and services. But ultimately, and it's no surprise here, that European, again, post-medieval, European reserve currency status began with the original imperial powers that discovered the New World before most Europeans knew a New World even existed. Now, in the case of Spain, though, something interesting happened. Even though Spain ultimately was, well, you can call it luck or cunning or whatever, acquired far more in the way of mineral rights in the New World relative to Portugal, they became the greatest coin minters in history as a result. They had the most productive mines. They controlled most of the precious metal, rich areas of the New World. And so they were bringing bullion from the New World to the Old at a very rapid rate. And this was kind of nice, right? Imagine you're the king of Spain and, ships are coming in every day with new shipments of bullion, which you can introduce into circulation. So you have the power over money. You can introduce that money into circulation when it has the highest purchasing power before it causes any inflation of the price level because of the supply growing exponentially, as it in fact was during the time. Well, that's nice. It allows you to do a lot of things. You can build nice palaces. You can pay off a lot of crony politicians, business people, traders, and you can fight wars. You can fight a lot of wars. In fact, you can fight so many wars that you end up losing them in the end. And this is what happened with the Netherlands. The Netherlands finally, by virtue of trading acumen, alliance acumen, pure raw intelligence, grit, guts, whatever it is, defeat the Spanish. The tiny little Netherlands defeat the Spanish and gain independence. And guess what? Well, it just so happened that Spain was already in terminal decline because of its own internal mismanagement, and so the Netherlands takes over reserve currency status, but as a trading state, not as an imperial one. Now, I don't want to belittle the fact that the Dutch will acquire an empire, but they don't acquire an empire in search of gold because they're such good traders, they run a trade surplus. They acquire an empire more just in search of resources generally. It wasn't as much a gold acquiring exercise as it was acquiring other things. In any event, the Dutch, however, being a tiny country, are eventually displaced by the far, far larger France, which becomes particularly ambitious under the reign of a rather short gentleman, shorter than myself, named Napoleon Bonaparte, who conquers the vast bulk of Europe, and who, incidentally, was clever enough, when forming his armies to conquer Europe, to pay them in gold specie, even though the domestic currency of France at the time was unbacked assignats, paper money. Napoleon was clever. Pay the army gold and silver, pay everyone else paper, everything will be fine. One of the key strategic decisions he made that led to his tremendous success, although, of course, that was fleeting. Finally, of course, Britain has it out with Napoleon, wins the Napoleonic Wars, takes over a large portion of France's nascent empire, and of course the subsequent growth of European imperialism generally, and assumes reserve currency status. But notice the continuity here. The reserve currency status is always linked to silver and gold. It is only in the final phase of this process that the United States acquires reserve currency status, officially in the 1940s, unofficially in the 1920s, subsequent to the devastating First World War. But it is only in 1971 that something fundamentally changes, qualitatively changes, and reserve currency status becomes unbacked reserve currency status. For the first time in world history, I can't stress this point enough, for the first time in world history, millennia, reserve currency status becomes unbacked by gold and silver. The first time ever occurred in the lifetime of most, not all, people in this room. That is how new unbacked reserve fiat currency is. Think about that. Right. That point is worth making. I made it by speaking. I'm making it in text there, and we move on. The thing is that why do these people lose reserve currency status? Why did the U.S. lose reserve currency status? They're losing it now. Why? Well, reserve currency status is kind of a curse. Think of a child. Think of a child given a lot of money by their parent to spend on God knows what, as children might. Well, naturally, if the child is a little bit greedy and, whatever, just not prudent, they'll spend it all before they get the next installment, the next weekly allowance. It'll all be gone. What if the parent allows their child to take out credit? Well, the child will max out the credit account, right? The child has no concept of this sort of thing. What of a country? And I'm going to quote from my own writing here. This is from my newsletter. This is not some, narcissistic exercise. I think it helps to illustrate the point. What of the borrower, or in this case, a reserve currency issuer? What of the borrower who, enticed by low interest rates, enjoyed by reserve currency issuers, borrows more than they can pay back? Naturally, the result will be a default. However, for the issuer of a reserve currency that is unbacked by a marketable commodity, such as gold, in the event that they borrow too much, they can just print more currency. Problem solved, right? Problem solved. Well, problem solved for the issuer of the currency, not problem solved for the user of the currency, who finds their purchasing power diminished in not just proportional, a proportional rate to that issuance, I would argue an exponential rate to that issuance, because you reach a tipping point where people sense what's going on, and they leave the game. The fact is this. The U.S. began to abuse its reserve currency privilege way back in the 1960s, even when the dollar was backed by gold. And there's a reason why today the dollar is backed by nothing. That is, what is the dollar? What's the definition of a dollar? The definition of a dollar today is simply, this note is legal tender for all debts, public and private. There's no other definition. Well, the problem was, some people saw this coming. Some people realized back in the 1960s that the United States, which promised to back the dollar with gold convertibility, was not going to be able to do so. Why? Because it was building the interstate highway system, the world's largest construction project in history. Tell that to the Chinese today. Yes, the U.S. interstate highway system was bigger than anything that has ever been done in China. Number two, the U.S. is fighting the Vietnam War. Very expensive. The Vietnamese put up a good fight. And also the U.S. began its so-called Great Society welfare programs, which were the U.S.'s big foray into the direction of a welfare state, which was very expensive. In any event, a certain French gentleman, Charles de Gaulle, saw the writing on the wall in 1965. This was a clever Renaissance man, notwithstanding the fact that Americans hate him to this day. But in 1965, he challenged the dollar as a reserve currency because he felt that the way the U.S. was behaving internationally was inconsistent, incompatible with its monetary requirements, the monetary requirements of the Bretton Woods system to back the dollar with gold. And so de Gaulle said, No, we should go back to a de facto gold standard, not just one where the US dollar is theoretically backed by gold, but where we literally use gold on a regular basis to settle international balance of payments. That is, if France exports more to the US than the US exports to France, we settle the difference in gold. He proposed this in 1965. There were multiple assassination attempts on him in the subsequent years. The CIA had nothing to do with it. Let's move on. In any event, by 1971, the United States was losing gold at such a rapid rate, something had to be done. In fact, the U.S. was losing gold at such a rapid rate, even Great Britain called President Nixon, well, actually called John Connally, the Treasury Secretary, and said, "We'd like our gold back, thank you very much." And when the special relationship with Great Britain breaks down that far, something is deeply, deeply wrong with the U.S. political process when you have no friends at all. And so in any event, President Nixon in August 1971 finally said, "Okay, guys, enough is enough. We're not going to keep paying out gold to convert for dollars. We're going to run out soon. And so I'm going to temporarily suspend dollar-gold convertibility." Temporarily. Now, we know politicians bend and extend definitions of words now and again, but when was the last time temporarily was used to mean over 40 years? I mean, it's been that's Tricky Dick was really a rhetorical genius at that. In any event, the U.S. goes off the gold standard. This is how we got to a purely faith-based fiat reserve currency system globally, as I said, for the first time in world history, and yet within the memory, or at least life span of most people, or many people in this room. So, in the 1970s, following Nixon's decision, the dollar collapsed. So I'm not joking here. The dollar fell very, very sharply, especially in the late 70s. In fact, the dollar fell so sharply in the late 70s that Hollywood had to make a film about it. And in 1981, Academy Award nominated director Alan Pakula made a film called Rollover, which was nominated for multiple Academy Awards, not just Best Director, starring Chris Christopherson, who remembers him, Jane Fonda, big budget Hollywood film. And guess what the film was about? The film was a fictional account of why the dollar nearly collapsed in 1979 and 1980. Yes, the dollar nearly collapsed in 1979 and 1980. The dollar fell in value very dramatically, not just versus the Deutschmark, but versus the yen, versus sterling, versus the French franc, versus every other major currency in the world, and versus gold. The dollar was in free fall in 1979 and 1980. Why? Why? Because somebody was selling it. Duh. All right? The fact is, the world did not want dollars at the time. Why? Because they feared it was going to collapse as the reserve currency and be replaced by gold. I'm not joking. I'm not joking. The United States came this close to moving back to a gold standard in 1981 and 82. This close. Ronald Reagan, when campaigning for the presidency, said he would seriously consider repegging the dollar to gold. Once he was reelected, he appointed a gold commission to study the prospect of doing precisely that. Alan Greenspan, maestro, Alan Bubbles Greenspan, okay? He wrote an op-ed in the Wall Street Journal in 1981 saying that henceforth the U.S. should only issue treasury bonds explicitly redeemable in gold. Why? To nudge the U.S., one issuance of treasury bonds at a time, to nudge the U.S. back onto a gold standard. Alan Greenspan. That's how close the U.S. came to going back to gold. Why? Because they were staring the abyss of losing reserve currency status in the face. And it was only by Paul Volcker taking interest rates to 20% and causing the biggest recession since the late 1940s. That was the only way the dollar retained reserve currency status, was by causing a horrific recession on the U.S., which was nearly as bad as what's been experienced since 2008. Right. 2008. Now guess what? History is moving on, folks. The dollar may still have reserve currency status, but guess what's happening behind the scenes? There are many signs that the fiat dollar standard is breaking down. Already in 2009, veteran journalist Robert Fisk reports that a huge number of countries are having secret negotiations to replace the dollar with a new global currency standard, a basket of currencies including gold. 2009. In 2011, the BRICS get together and call for a new international monetary system. The BRICS, Brazil, Russia, India, China. Well, they're an interesting group, aren't they? Several of these countries went to war a few decades ago, and now they're buddy-buddy in opposing U.S. monetary hegemony. Why? Because they see that U.S. monetary hegemony no longer functions in their best interest. In 2012, they specifically call out what they consider to be unreasonable U.S. policies towards Iran, Venezuela, Syria, and other important BRIC trading partners. Oops, the U.S. continues, as we know, to try and cause some trouble for those trading partners, and the BRICS are none too happy about it. And very recently, in January of this year, the governor of the Reserve Bank of India came out and said that global monetary cooperation was breaking down, with specific reference to actions by the United States Federal Reserve. Cooperation is breaking down. It has been ever since 2008, for those who've been paying attention, and things are coming to a head. Well, why shouldn't they? The BRIC economies are now collectively larger than the United States. Who is the United States to tell everyone in the world what currency should be the reserve? It's not backed by anything, and the U.S. economy is shrinking in size relative to the rest of the world. The BRICS now trade more with each other than they trade with the U.S. The BRICS now trade more with the rest of the world than they trade with the U.S. The rest of the world, therefore, trades with the BRICS more than it does with the United States. And the trends are only going to continue according to the official and semi-reliable forecasts by the IMF and the World Bank. History is being made. Let's look at the lessons of history and consider a little game theory. Giulio Gallerotti is a professor in the United States. He wrote a book some years ago about the balance of power in international politics, including international economic and monetary affairs. And what he noticed is that declining powers in relative decline, say economic decline, as I just pointed out, tend to do things that are counterproductive. Gee, is the U.S., by imposing sanctions on other countries that trade vital oil supplies with Brazil, Russia, India, and China, doing something counterproductive? Perhaps it is. Perhaps it is. Do you think China reacts favorably to its oil suppliers being cut off by sanctions? Probably not. In any event, it was a best-selling book, but Giulio Gallerotti, Professor Gallerotti, is also an authority on the historical, classical gold standard, and he made a great observation in his classic work on the subject, essential reading for monetary historians. The gold standard showed very little cooperation among national governments in the process of formal regime building. The rise of the gold standard can be seen more as a case of a regime emerging from a failure to cooperate, just as the BRICS, including India, as explicitly mentioned, are failing to cooperate increasingly with the international monetary regime today. Then there's Nobel laureate Robert Mundell, Nobel Prize winner in economics some years ago, who recognized several years ago that the dollar, that is the dollar's loss of reserve currency status, is the reason behind not only the 2008 financial crisis, but the subsequent crises that are rippling through the system month in and month out to this day. And yet Mundell, many years ago, made the following observation, again, a bit in line with what Professor Gallerotti observes. The period of the gold standard was a period that was unique in world history, when there was a balance among the powers and no single superpower dominated. Well, of course, if you have an unbacked piece of paper currency that you print at will to pay for imports from the rest of the world, that's a nice deal. You print money, you get real goods. You print money, you get real goods. And it goes on for a generation, because that's basically what the U.S. has been doing ever since I was born, okay? That's a nice arrangement. Paper for stuff of real value. And then someday, of course, you just default. How convenient. Well, you need to be a superpower to get away with that sort of abuse of a reserve currency, don't you? Don't you? If there's a balance of power in the world, it's going to be a lot harder to push your worthless paper on other countries indefinitely. Mundell knows this. He's not stupid, and that's probably why he got the Nobel Prize. In any event, this is all going to blow up, folks. I don't know when. I don't know exactly how, but it's all going to blow up. And the reason I know this is because I watch a lot of films, all right? One of my favorite films is A Beautiful Mind, 2002, starring Russell Crowe, about the legendary mathematician slash economist John Nash, who came up with the modern precepts of game theory, or the founding precepts of modern game theory. Now, at the Nobel Memorial Lecture for Nash, one of his teachers, in fact, made a statement which was very interesting about how it was not just that John Nash discovered how game theory worked, he also discovered this precise, important point at which equilibria shift and break down. And it has to do exactly with what was just mentioned about a unipolar, superpower-dominated world becoming a multipolar one. Because players, as power shifts, the interests of the players in a game don't shift linearly, they shift exponentially. Exponentially. If anyone has ever played a game of Hearts where you can shoot the moon, you see this happening as it becomes clear someone's about to shoot the moon. The other players begin to gang up against them. Or many other examples of how this plays out in simple games, complex games, and so on. In any event, the point is the following. Even though every country in the world would love to have its own reserve currency printing press, would love to be able to print paper to pay for imports forever in order to get wealthier and wealthier and wealthier at everyone else's expense. Yes, every country in the world would love to be able to do this, but there is a limit. And the limit is when other people are no longer willing to accept those worthless pieces of paper. There's a famous scene in The Beautiful Mind where Nash and his buddies are hanging out in a bar, enjoying a few beers, when in walk a few girls. They're all very attractive, one of which is simply more attractive than the others. And so, as young men would do, they all immediately approach the most attractive woman. But John Nash says, wait guys, we can't do this, because if we all go straight to the one girl, she's going to be put off by the attention, her friends will be put off by the lack of attention, they'll all bolt from the bar, and none of us will get to engage them in conversation. At least not for more than 10 seconds. And so he says, straight out of the film, no one goes for the blonde. It's the only way we all win. In monetary parlance, this is where we're going. No one goes for the printing press. It's the only way we can all trade with each other. That's where we're going. If everyone keeps printing money willy-nilly in the so-called currency wars, trade will break down. Imagine what happens to this country when trade breaks down. Oops. Bad news, all right? Those iPads won't exist, etc., etc., etc. Okay, food, energy, you name it, okay? The fact is, without monetary cooperation, you won't have free trade. And without sound money, you won't have monetary cooperation. Everyone is going to have to give up the printing press as we return to a multipolar world and as people demand payment not in paper, but in hard currency. In my book, I predict that will be gold. And in my book, I predict that this process is already well underway, even though I can't predict the exact timing that it catalyzes into a regime shift. Two more films. Goldfinger, 1964. Who remembers the premise for the plot of Goldfinger? Goldfinger, good, a couple. Goldfinger is secretly acquiring, remelting, and smuggling gold to try and hoard as much gold as possible on the one hand, while on the other hand, he's planning to blow up the single biggest hoard of gold in the world with a nuclear bomb, indeed, which is at Fort Knox, Kentucky. So he's going to acquire it all for what he can for himself and blow up what he can't acquire, which is the U.S. official gold stock at Fort Knox. And by doing so, of course, his gold will become worth more than it would otherwise be. Not only will he have a lot, he'll have essentially all of it at that point. So, of course, James Bond foils his nefarious plan. But you have to respect the plan, don't you? And this is why I lean towards gold instead of Bitcoin. I'm going to lay a card on the table here, folks. I respect Bitcoin for what it is. It's a legitimate answer to a massive problem, which I've detailed here. That is, failing fiat currencies, not just the dollar, the whole system. But when Goldfinger blows up the gold, let's say he succeeded. He blew up the gold in Fort Knox. Now, different ending. What is his gold going to be worth? More or less than it was before he blew up the gold in Fort Knox. A hell of a lot more, because the supply is restricted. It's fundamentally restricted. What if someone blew up Bitcoin servers? What if someone blew up the supply of Bitcoin?
Can't be done. It's decentralized.
Ah, yes, I know. But what if they disrupted it somehow? What if the NSA inserted a worm into it? What if they found a way to tax it at source?
Like they do gold.
Well, hold on. Look, again, I'm not a computer expert. All I'm saying is this. If for some reason the supply of Bitcoins could be messed with, would their value go up or down? The thing is this. I hate to say this, folks, but this comes from a film that I loved when I was a child. It has always been easier to destroy than to create. And the fact is, things that man creates are easier for man to destroy. Things that God, the universe, whatever you want to call it, creates, well, they were created by God, the universe, or whatever. Gold was created by, call it what you want. Bitcoin was created by us. Now, that us may go by the pseudonym of Satoshi Nakamoto, but in any event, I have a little more faith in gold for these very fundamental reasons. I don't want to belittle Bitcoin, and I respect Bitcoin for what it is. And I have no reason why Bitcoin should not freely compete with gold as a store of value. I have no problem with that. I simply have an opinion about if that free competition were to occur, what would win out in the end. That's all. But I have nothing against Bitcoin. I certainly hold it in far higher regard than depreciating fiat, dollars, sterling, euros, yen. The list goes on and on. And so, to close with that, basically, I will only say that I welcome this debate. And when we move to the panel discussion here in a few minutes' time, by all means, go ahead and have it out with me. But that's where I come down in the debate if I'm pressed on it. But really, the problem is the problem and needs a solution. And I welcome all attempts to solve it. So thank you very much. That's it for my part.
ECR is a mineral exploration development company focused on advancing gold projects in the Philippines and Argentina. Our mission is to create value for our investors by taking the necessary steps to move these projects towards production. In the Philippines, ECR is in the process of earning a 50% interest in an advanced gold exploration project located within a very significant gold and copper mining district. And we believe that, subject to successful confirmation and expansion of the extensive database of previous work that has been inherited from previous operators, we will see the project develop into a very substantial gold mining opportunity. At our 100% owned project in the northwest central part of Argentina, ECR is pursuing an exploration strategy orientated around identifying multiple high-grade, relatively small deposits suitable for advancement to production in the relatively near term. We believe this strategy will be complementary to the strategy adopted in the Philippines, where we expect the project to prove significantly larger but to be developed on a longer timescale. ECR is listed on the London AIM market and has a market capitalisation at present of approximately £7.5 million. I hope that has been sufficient to whet your appetite, and I encourage you to find out more about the company at your leisure.